585353. Hey, everybody. What's going on? Matt is having a little issue logging in right now. So you get me. All right. He's going to come in any second. We're just going to hang on and see what. Yeah, it's going to work, buddy. You got in? 585353. Okay. I'm happy the market finally closed. Yeah. Shut up. Hold on. I'm going to. Okay. There you go. All right. Little technical difficulty there, but I believe he's going to come in any second now.
What's up, everybody? I am here, and we are live for episode 17. Thank you all for staying. I'm sorry I'm doing this from my phone, so it's going to be a little annoying today. But I'm just going to summarize. First of all, everybody, thank you for being here. Real quick, I'm going to go over options today. There were so many side questions about how to properly average down. Some people made comments, I don't have money on the side to average down. So all of these things should not be happening if you're following the rules. So I'm going to go over the rules very specifically, very simple, so that you make sure you're trading the right way, because you have to be able to average down if you're going to be a profitable, successful trader. Okay, real quick, I don't control the market. Number two, the market dipped, the pipeline shut down, gas prices are spiking, there's a gas shortage on the East Coast, Israel bombed Gaza, they did it again. I was hearing talks last night there was going to be some type of truce and they were going to clear out their wounded and things of that nature. That's why I thought the VIX was going to go down. I also thought there might be some news on the pipeline. I mean, how can these people not get it together? So those are my assumptions. I was obviously wrong. So that's why we're going to talk about how to average down correctly in some positions. But again, what do we see in the Dow? Just real quick market recap, okay? The Dow sold off on Friday. The Dow sold off, went from up 230 points to down 35 points. It sold off yesterday. It sold off today again. All right. I mean, I think we gained a little maybe yesterday. Then it sold off today again. The Dow is being sold off. There are no Delta or Carnival easy quick returns like there used to be. You look at DraftKings, which is also part of the Dow, getting hit hard. People have been shorting that stock. Tech real quick. All right. So tech's problems. When interest rates spiked this morning, tech had issues. There was an announcement or a report at 8:30 a.m. And I'm going to get more specific into that before I talk about options, because that's what's most important. So when interest rates spike, and they've been talking about the 10-year going to 2%, what does that mean? It means money is more expensive to borrow. And if you're in the market, and let me just go and straighten this out real quick, there have been $8 billion borrowed in the last 6 months to invest in the stock market. $8 billion, right? The previous 12 years had about $8 billion. So you take what's in 6 months to the previous 12 years, and it's not like we're coming out of the Stone Age where people are like, oh, stocks, what stocks? You know, they knew what they were doing 12 years ago. They knew what they were doing 5 years ago. They weren't borrowing as much as they're borrowing today. Okay, so what are we seeing? The markets ended at the lowest points at the end of the day. The lowest point with tech, the lowest point with the Dow. Obviously, it's just so over levered. Okay, now what positions are holding? So I wanted to talk real quick about stocks that are holding today. Amazon, Microsoft, Google, Facebook, they all didn't get as hurt. So if your stocks are off 7%, 10%, 12%, they're more volatile plays. I sent a tweet out this afternoon that talked about bottom feeding. That's what we're looking to do. We're looking to grab the bottom of certain stock positions. Unfortunately, when we're 10 out of 12 days red, and then we have a green day, which kind of just pulls the rug out of us. I believe today was going to turn around. I believe today was going to be green. You all know what I was thinking pre-market. However, the market was so beaten up with inflation, with war in the Middle East potential, with gas shortage, that it was impossible not to sell. People tried to hold it together, and then you would see a bigger dip. They would hold it together, a bigger dip, and then people finally figured out, I'm just going to sell. And then the market went crazy. The VIX, or the UVXY, spiked from 608, where I thought it was going to actually start dropping from, and I thought it would be under $6. I don't know where we are now. It spiked to like 640. So yes, I was incorrect. I averaged down, and I'm going to tell you how to average down the correct way, even though my average down is currently losing money. But I averaged down when it was like $6.08 or $6.13. I bought the June 4th puts, which gives me much more time. So it doesn't matter if it takes 1 day or 2 days or 5 days or 7 days, it's going to come back down. All right, the UVXY is going to do a reverse split on May 26th. What does that mean? It means that they're going to jack up the price and give you 5-to-1 shares. So for every 5 shares, you're going to get 1 share going forward. I don't know if it's 5-to-1, 4-to-1, 8-to-1. There are all these different splits that it could be. But they want to get the price from $4 or even $5 or $6 where it is now back up to like $24. So I'm assuming it's going to be like a 6-to-1 reverse split. With that said, speculation plays, green energy, QS, Blink. I mean, all these struggles. Fuel Cell, I posted a picture during the day. Plug, which we know I like. Neo, Virgin Atlantic, okay? Zero earnings, or they don't have zero earnings, but they came out with such terrible earnings and such terrible, future potential earnings. So we're talking about Virgin Galactic in 10 years, it's going to be a $30 billion industry. Great, that's 10 years from now, and traders do not want to buy Virgin Galactic, which is space right now. They want to invest in something that has real returns, real revenue, real money. So that's real quick. Okay, let's get to the lesson. So today's lesson is options. So real quick, I'm just going to simplify it for you. I have specific options strategies on my platforms, and I'm going to go over the option strategies, but there are specific rules, okay? Rule number one is the 25% rule. So this is clear cut, most important, all right? If you have $1,000 to go into this position, whatever it is, my options play, let's just call it the UVXY, okay? You need $1,000 to go into that. That means your first buy would be $250, okay? So you're $250 in, you average down when it's down 50%. So let's say we bought yesterday, which we did, and it was down 60% this morning. So you bought 2 more positions, right? So now you bought an extra $300 worth. So you still have $490 on the side, all right, from your original $1,000. Then at the end of the day, it's so freaking low, and now all your positions, which you average down on, are still down 70%. So you buy 2 more positions, and what does that do? It still means you're down, but now you're only down about 50%, and now you have 5 contracts. So when I'm getting DMs on the side, what do? I don't have any more money to average down. You must have the full amount to go into any position, whether I give an alert, whether you pick the alert, whether you pick the stock or the option. You must have a full 100%. So whatever it is, if you're playing with $400, right, and you get an alert or you like a stock or an option, your first purchase is $100, 25% rule. If that means you can only buy 1 contract, then that's all you can buy. You cannot average down at 20% or 30%. It must be 40 to 50%, if not more. And we only buy 1 position in a day. So our position yesterday carried over to today. We're down 60%. We buy 2 more contracts when we think it spiked this morning at like 590 something. Again, I was wrong. It spiked a lot harder. It spiked an extra 5% on top of that. But the point is, you then have 3 contracts. If you wanted to purchase at the very end of the day, I would wait till tomorrow morning. But if you wanted to, now you'd be in for 5 contracts, your full $1,000. So if you say you don't have money on the side, then there's a way to fix that as well, okay? It's about decision making. So this is something else that I had a lesson planned even before today's terrible market, and I wanted to talk about options today. My lesson plan was, you tell me or you reach out, you have 2 positions, one's in stock, you're down 15%, let's say, and one's in option, you're down 40%. But you have no money on the side, okay? Sounds like something familiar to you guys. You're all in, you have no money on the side. Each one of your positions is currently being beat up. We've seen so many red days that it completely makes sense. So what do? How do you secure the safest play for yourself? And that's what I'm going to tell you today, okay? So again, your stocks are beat up. They're all down 15%. Let's just assume for this example, your options are all beat up. Let's assume they're down 40 to 60%, okay? Number 1, okay. So the second option rule is always give yourself more time. Meaning, if you have an option expiring this Friday, which would be the 14th of May, or the next Friday, which would be the 21st of May, and you're out of the money, okay? The third rule is buy an option in or out the money. So here's the example, okay? Your option is we'll do $5.50 puts for the UVXY. Anybody that wants to follow along, look at the UVXY. It's currently, let's say, it's $6, okay? So you have $5.50 puts, meaning you want the UVXY to go under 550, okay? It's currently out of the money because it's $6. So how do you average down properly? Number one, you go out extra time. So if you're part of my platform, you saw my spreadsheet, you saw the final position. I chose a position June 4th. Why? Because even if the market is volatile for the next couple of days, it's still giving me much time to get out and see the UVXY go down. So that's number one. Buy yourself out some more time. So anybody that has options expiring, and it doesn't have to be that position, the UVXY, it could be any stock. Say you're in Plug, say you're in Neo, say whatever stock, you're in Apple or Disney, some people mentioned, or DraftKings. Here's what you want to do. First off, you want to give yourself more time. So you're waiting for the dip. We've seen many dips. So what are you going to do when you see what you think is the biggest dip? You're going to buy June options or July options, the same strike price. So you're not changing much. You're just giving yourself more time. So what do I do with the options that I currently have? Well, you're crossing your fingers and you're hoping we get a spike in whatever stock or ETF it belongs to. For example, if the UVXY tanks tomorrow and goes down 30 or 40%, I'm probably going to hold on still till Friday because I think it's going to settle under $4.50, which means, yes, I think it's going to go down 30% in the next 2 days. I'm keeping my fingers crossed that the pipeline will reopen, and at least they'll come out with some news on that, and hopefully there'll be a truce, because all Israel and Gaza will do is fire missiles on each other, and then they have to just rebuild the territory, okay? I don't understand how two people who are neighbors cannot get along. Some of you have neighbors. I get along with my neighbors, but I guess some people have houses. They don't get along with their neighbors, so it makes sense. Okay, so averaging down correctly, all right? We went over the 3 rules. First off, you have to have the full 100% of your money on the sidelines to average down. Number 2, we choose options in or at the money, all right? And number 3, we always give ourselves more time. So I'll give you an example for Plug. And let's just say Plug is $25. I know it's under that, but let's just say $25, okay? So you have $25 strikes that expire, let's say this Friday, okay? And the stock now is $24, okay? So it's under, meaning your option is out of the money. If today was Friday, your option would be worthless. So you want to average down because you like Plug. You want to support your position. What do? Okay, so you look at your $25 strike and you go out to June or July or September. You buy yourself more time. I'm not telling you to sell your current position. What I'm telling you is instead of averaging down by buying 2 additional contracts, say you have 1 and you're losing money, buying 2 more. But instead of buying the same one that's currently out of the money that would be worth 0 come Friday, you're going to buy the June one. Why? Because if all this mishmash in the market finally gets taken care of and Plug goes back up to $28 and then $29 or whatever, by the time you're going to make your money back. So you might be down 80% on these and you'll sell them. And I'm going to tell you how to sell them in 1 second. But by the time your plugs expire in June 4th or whatever expiration, June 18th, whatever you bought, you're going to be up 80%, 120%. Again, you're just buying more time. So the option rules apply even when you're averaging down. If you're averaging down, your options expire end of week or the end of next week. Don't average down. Buy yourself more time. It doesn't matter if it's UVXY, Plug, Apple, Disney, Google. I don't really care what your position is. Roadblocks. Average down. Buy yourself more time, okay? I've made mention that I've messed up on this twice. AI, I cost myself like 18 grand, which is a big amount for me in the options play because I usually, I make 3,000 here, I make 2,000 here. And then I did it once again with D-Dog. And then D-Dog spiked, and now D-Dog's still strong. It's like $77 or something like that. If D-Dog was not good and the market was as bad as it would be, or it is, it would be like 68 cents. So let's get back to options because I don't want to lose my focus. So again, you want to average down. You're buying yourself out an extra month or longer, okay? You still have your first position, but you're averaging down by buying out an option that's, a couple months away. And you'll buy 2 of them, all right? So your first position was 25%. Hopefully you have money on the side. Now, if you don't have money on the side, getting back to that. So all your stocks are down 20%. All of your options are down 40 to 60%. That's the scenario we're using. So what is more important to average down? It certainly isn't your stock, because if your options expire worthless, okay, then you get a big zero on that side and you still have the stock, which is down 20%. Okay. So what I do is I sell whatever stocks, and they don't have to be related. I don't have to have Disney stock and Disney options. I can sell Disney stock. I can sell Facebook stock. I'm looking to get more money. Why? Not to throw at a bad position. If I'm wrong about UVXY and it doesn't go under 550 by Friday, but it does it next week, I'm still going to be okay because I'm buying the same puts. I'm just buying them out sometime. So whereas I might just have to salvage a loss here, I'm planning for my future. It's about planning correctly. So you have this money. If you throw the money at a bad option or a bad position, you're like, dude, it's got to turn around. It can't be all this bloody this week. It can be. The market is like a beast of its own. It could go down as much as it wants to. When you keep thinking, oh, it's going to turn, and that's me. I'm a bullish guy. I'm thinking, okay, I'm calling the bottom. I see the demand. I see the demand. I see the turn that people want to start buying, but the market is too strong. Even if there are 3 or 4 institutions or hedge funds that are buying certain stocks today, and one of those stocks was NNOX, which I mentioned, right? So the stock market's falling, and NNOX is going up, and it's going up higher. And I mentioned I see the demand, and it was $21.92, and it went all the way up to $24. So it made another 10% in this shit-tasting market. The stock went up another 10%. Imagine if it wasn't such a terrible market. What was the Dow down, like 700? I'm assuming I didn't look at the NASDAQ at close, and I can't because I'm on my phone. So I'm assuming the NASDAQ was down probably like 400. All right. I mean, it's crazy. But what are we expecting to see tomorrow? So I spoke to my friends in New York after today, and I was like, dude, that blew my mind. I was really shocked about it. And he was like, yeah, we kind of thought that might happen. That's why on Tuesday we only entered into our first position. And I'm like, how much of a position? They're like, not much. It was in the teens. So I'm figuring it was like 17 or 18%, something like that. So I said, what are you doing tomorrow? He said, I don't know. You saw what happened on Tuesday. We'll see how the market settles, but I wouldn't be surprised if Thursday looks like Tuesday, because Monday certainly looked like Wednesday. So again, I'm cautiously optimistic. I'm buying options out additional time. But let's just go on. Okay, so you're in these positions. What's most important to average down? Again, get rid of your stock. If you need money and you don't have money, or you're stuck in a position, even if you're just in an all options place. First of all, if you're all options place, you're living dangerous. The NASDAQ was around 357. Okay, yeah. So I mean, I mentioned this morning Dow was going to be worse than the NASDAQ, but I thought the NASDAQ would be up like maybe or even by the end of today, and I thought the Dow would be down like 300 points or something like that. So the fact that there was a complete sell-off and the rates spiked, and we still don't have that oil crisis in the pipeline, and we're Israel's still bombing Gaza, and Gaza's firing 400 missiles back. All right, but let's just focus on options real quick again, okay? And I just want this point to be in your mind enough, all right? Whatever, you have to have enough money. It's not that options are dangerous or options are risky, because they're not. Options help you lever your positions. So if you're getting beat up in a stock, you would sell your stock. It's most important to average down on your options. And I just went over how to average down on your options. You buy out a few months. You buy the same strike, but you give yourself 3 more months. Yeah, Matt, but they're more expensive. I don't care. You want to not lose money, right? Would you rather go? So people sometimes buy so far out of the money. They're like, yeah, I got this one for 13 cents. It's still, if it goes to zero, it's still worth zero. So you're still losing 100%. So I don't care if you bought it at $13 per contract and you bought 100 of them. If they're worth zero, they're worth zero. I like in or at the money. Okay. We must plan in advance. So you're never paying the ask. So I say, okay, well, UVXY is spiking. I'm going to buy more puts. You know what I do? I enter a price lower than the current bid by like 10%, because if it spikes harder, which it did, at least I saved 10%. So instead of being down 80%, I'm only down 70%. And because I averaged down the correct way in my thing, I'm actually down like 51%. So I actually, I need the UVXY to run. The SQQQ, it tried to rebound a few times, meaning the NASDAQ tried to rebound a few times, but the selling was too intense. The market was like a perfect storm. The only thing that would have been more perfect today is if Biden and Powell got on TV at like 2 p.m. and started having coffee and just shooting the shit about anything. The market would have tanked. So hopefully I'm helping you guys on your positions. I know people are screwed. So let's just talk about those people that are screwed, that have options expiring on May 7th, which is 2 days from now, or May 14th. All right. And let's talk about different positions, because I'm done with the UVXY and the SQQQ. We already know my sentiment on the market. I think things are going to change. I think things are going to settle. And I think the demand for the NASDAQ was there. So if it takes a few days longer because everything that's going on in the world, shit happens. That's just what it is. With that said, you're in a bad position. Let's just say you went all in on options because I don't know why. Oh, so you went all in on options. I don't know why. You need to sell your options. You need to wait for a spike. So you need to plan ahead. So I don't care what your position is. Let's say it's down 80%. Here's what you're going to do. Let's say your option contract is worth $20 per contract. I don't care how many you have, okay? You're down 80%. It's worth $20 a contract. So that means what? You paid $1. You paid $1 for it. Easy solution. You paid $1 or example. You paid $1. It's worth 20 cents, okay? It's not going to go back to $1. You know that it's not going to go back to $1. So you basically have to accept your loss and decide what fair value is. Why? Because at the same point that option is down, you're buying the June or July or September options. So you already levered it. So you actually want it to go up now. You have your second position or your position that's out a few months. The stock goes up, taking your option up, your option up with it. So you're not going to get the dollar back. But if you can get 36 cents on a quick spike, then you'll get out. You'll lose 64% rather than 80%. Okay, 64% sucks, but 80% is worse. And so anyway, and then you already have your options that are out a few months. So when it goes up and it recovers, your options are going to get you 60%, 80%, 100%, 200%. I'm in a few positions that I believe at the current valuation will return 200 to 300%. So if you want to look at my spreadsheet, go down, look at my September call options, okay? I am very bullish on these stocks. I care that they're getting beat up. These, today, yesterday, they were good. The day before, they got beat up. The previous day, they were good. I care about their daily movement, but I zone out. You have to zone out. If you micromanage, and here's a lesson that I wanted to cover today also, it's called compounding your losses. So what does that mean? It means you start a day like today, and let's just say you have an account with $2,000 in it. You start the account with $2,000. You buy into a bad position too soon. Then you're down 25%. So rather than waiting for your option to be down 40 or 50%, you decide you're going to be smarter, that it's going to turn around, and you buy a couple more contracts. Now keep in mind, you're jumping in too fast. Instead of following the 25% rule, you bought 5 contracts, and then when you were averaging down, you thought you were being too smart, so you bought 10 contracts. So now you have 15 contracts. The day is basically 10 a.m. You're down 30% all around. And then what are you doing? You're thinking, okay, I'm going to sell this for a loss. You sell some of your stock, and then you buy some more contracts. And then it drops 50%. And now you're thinking, you know what? I'm just going to sell everything. I don't really care. So now you make that trade and you sell out all of your option positions, whatever you were averaging down on, that you're currently down 50%. You were originally down 20%. If you kept just your one option, you'd be down like 60%, but only with one contract. Instead, you bought extra contracts. You bought 3 more, 4 more, 5 more. You averaged down the wrong way, and now you're 6 to 10 contracts. You're down like 50%. And then you're thinking, geez, I'm just going to sell everything. So now you've executed 2 sales already. Number 1, you sold your stock that you might have bought that morning. So it's a day trade. Number 2, you averaged down on options, and then you just sold them because you got scared. Okay? So now your account from $2,000 has about $888 left in it. Okay? And you've made 2 day trades. And you go, okay, you know what I'm going to do? I'm going to jump on the other side of the trade because at least I'm going to trade the momentum. Now, today that would have worked. But most days, it's called compounding your issues. So you jump on the other side, and then what happens? What you originally thought happened was going to happen. The market rebounds, or your stock rebounds, the one you just sold. So now you're cursing at yourself. I just sold that option. I was down 50%. If I had held it, I only would have been down 25%. You're cursing yourself, and you jumped on the other side. Instead of having calls, you went from buying calls to puts because you're like, I'll just make my money back. So it's called compounding your problems. So you've made 3 trades. They're all bad. You wrote all of them down and got out at the worst exit points. You bought in too quickly because you didn't plan ahead. So now your account from being $2,000 down to $888 is now down to $326. And you're thinking to yourself, God damn, it was only 3 hours ago. I only had one option. And yes, I was losing 60% of it, but I was only down like $100. So you went from being down like $100 or $120 to now down $1,700 on the day. You ate up all of your account. You have $300 left, and you have 1 day trade left for the next 4 trading periods. So how the heck are you going to make your money back? Has this happened to anybody? I bet it's happened to like everybody, because I'm going to tell you, even me, when I started trading again in August, I did that to 2 accounts. And again, I started small. I put 1,600 in one, I put 2,800 in the other. I did that multiple times. I took it up to 60,000 this time, 60 over here, pulled out money, and I keep doing it again. It's safer play that way. But the point is, I know about compounding your issues, because I had one day, again, it was only $2,000 or $2,400, and I took my 2,400 and I made the bad trade in the morning, and I was down to 2,200, and I thought I was smarter and I was going to be correct, and I compounded by 3 times and many options. So now I had a full 4 positions, and it went down. Now it was down 50%. So what did I do? I sold, and then I jumped on the other side, or similar stock that I thought would rebound. But they were related. They were both like EV stocks or Bitcoin stocks or some type of stocks that I got out of one, or was fintech. I got out of one fintech into another fintech. So I was down 50%. I bought in too early. I compounded my problem by buying too many contracts, and then I sold them for a loss. I sold them for the bid because I wanted out as soon as possible. And what did I do? I didn't even let them drop. I went into its competitor and I compounded that because it went down another 30% when I bought it. So rather than having one option and being down 60 or 70%, I blew up that account. All right, now I'm sharing with you because some of you are in the same position. Some of you have been killing it lately. So it's called a false sense of security. It means when you are just too overconfident, when everything that you're picking is going the right way, or you might have been listening to me and I was calling the market on fire for like 3 weeks, 4 weeks, 5 weeks. And yes, I had 2 bad days, then I would have a good day, and then another bad day, then a good day. And again, through longevity, those of you who stick with me through the platform, I'll tell you, a month from now, you're going to have more money. A year from now, you're going to have more money. And 5 years from now, you won't even be able to believe how far back it was that you were like, oh my God, I can't even believe I started my account like that. Yeah, so everybody has that kind of issue. I was talking to all of you, unfortunately, and it sucks because we all think we're smarter, and we're all greedy, right? And we all think we're going to be right. So we do that. But let me open up my computer here. We were having some computer issues before. My mic wasn't working, but I could definitely look at stocks. So I do want to get to everybody's questions today. So I'm going to ask Carlos. We're not doing any slides today. I did cover the market. Hopefully everybody understands the comments. Also, DMs on the side. Please save them for YouTube. I want to give everybody the education. People like to show me their results on the side, show me their rules work. Then they ask me questions about the market. Is this a complete sell-off? No. What we're seeing is corrections in the marketplace. So when the NASDAQ sells off and the Dow sells off like this, it's because it was too frothy. I mentioned last Friday how frothy or how overvalued I thought the Dow was, and that I was going to be selling my Dow stocks on Monday, which again, I'm so thankful I did, because I don't think I'd be able to be okay, even with all, whatever money I have in the market right now. I don't think I'd be able to be okay if I said the Dow was going down and it continued to go down. So let's get to some questions, okay? Carlos, if you could, I'm going to bring up my stocks here. Let's go to Market Watch here. Okay, so I like to use free services to look at stocks and answer questions for you guys. Okay, so how do you know when a stock reaches bottom? Okay, I like to call bottom stocks, okay? So if you haven't watched my video, please subscribe to the channel. But I like to call beat up stocks, which means stocks that were shorted, stocks that maybe missed earnings, stocks that you hear about a short report, stocks that maybe Kathy Wood sold for ARK or some other large institution sold off. So how do you call the bottom? Well, normally it's not that hard to call, because normally the market rotates. A green day, a red day, a couple of green days, a couple of red days. It's not such a streak where it's like 8 or 9 days in a row. In this case, we've seen red 11 out of 13 days. Two green days. One was superior green, and one was a shitty green day. So it's just really tough. If you're talking about tech or anything with 4 letters in it, now I've been saying this the entire week. If your stocks have 4 letters in it, they're NASDAQ or tech related, it's very difficult. But you will see the bottom when the inflow is greater than the outflow. When there's more demand, it doesn't mean your stock has to go up. Your stock price can still go down, but people are buying. People are accumulating your stock. Okay, example. We all hate the stock, right? EBON, Ebon, right? So the market was getting roughed up today, and I was like, okay, well, is that $3, $3.06, $3.05? I was expecting it to be off like 20 cents. We remember the same thing happened the other day. Ebon was off like 30 or 40 cents. It went from 450 or 350 to maybe 310 or something like that. So I had no doubt it was going to be off another 25 cents. So when it was basically at $3 when the market was getting raped, I think that's the bottom. The bottom is 290, 288, $3, something like that. Oh, Ebon is below 52. Well, I'm looking at that right now. Okay, so let's go on to another stock. Let's allow this. I don't know. Market Watch keeps giving me these ads. All right, let's look up stocks. Okay, I was watching the volume on Tiger at M today. Okay, great example. So Tiger, TIGR. I'm going to tell you what I saw pre-market. I'm going to tell you what I saw during the market, and I'm going to tell you what I saw at the end of the day. Okay, so anybody that's in Tiger, yes, it's being beat up. All right, but I always compare Tiger to Futu, FUTU. So at one point, Futu was off like, I don't know, 17%, I think, or something ridiculous, 10%, 11%, 12%. And I was expecting Tiger to see the same. Tiger wasn't. What we saw pre-market, right? They were pushing the stock up, even though the stock's futures were getting beat up. Tiger was up 7% pre-market, then 5%, and then it was holding 4% pretty strong. Somebody is a fan of Tiger, a big institution, a big hedge fund, somebody like that that knows how to manipulate the market. And I'm telling you that because as the price would go up, they would put in these buy walls, meaning that they would put in a $15,000 wall. So if you're selling the stock or trying to push it down, you know you're not going to get it under his wall. So that if you're buying the stock or you're looking at the stock, which is up 4% pre-market and nothing else is moving in a good direction, all of a sudden people are like, oh, maybe there's news out. Let me buy this stock. So he keeps pushing it up higher. Then he would fit in a wall, push it up higher, fit in a wall. So even when Futu was getting beat up and off 6, 7, 8%, I looked at Tiger and Tiger was off 1 penny. So that is a strong sign. There is demand for that stock. The same exodus that left that stock at $20 to 19 to 18 to 17 to 16 to 15, that demand is back. And when the market bounces back, and let's hope it's tomorrow, I assume Tiger is going to bounce back pretty darn strong. I don't know what it was off today, but I know it was holding $15 pretty well at the end of the day. It dipped under it. Then I saw 1504, 1511. As long as it held $15, I knew that was a good thing. If it went under $15, that's telling me that institutions are selling those $15 calls, taking the profit from them, and they're going to hold it under $15. I did not see that. So I would not be surprised if Tiger's going to run, and I'm looking at options for that. I also, my own positions. I mentioned I bought eBay today. So I bought eBay. I thought it was bottomed. It wasn't. It went down lower. But again, my eBay position, I think, is either out to June or September. I think it's June options. I also bought NNOX options. I bought them today for $1.25 when I saw NNOX was spiking, and I sold them for $2.54. So I made 102% on that trade, which is why I feel less pain from the UVXY because I averaged down the right way, and I bought options that are out there. But I have probably over 100 contracts, and I probably have over like $5,000 or $6,000 or $7,000 invested. Okay, I was watching the volume on. Okay, that's the same question. So let's go on to the next question. I'm going to get some water here. Okay, GMBL. Let me look that one up. I don't know that. I do know Genius, which I spoke about the other day. Sorry, I'm trying to hold my phone off the table so y'all can hear me. GMBL and eSport. Yeah, eSport Entertainment, right? I don't know the stock, but so these are plays. When I spoke about, if you missed the beginning of this episode, please go back and watch it. But I spoke about strong stocks and who's investing in what kind of stocks and the psychology of trading. Okay, your stocks and your companies must have earnings. They must have growth. They must have revenue. So I know these stocks like eSport Entertainment come out, and yes, they have a bright future, and there's going to be like a gaming league. I'm assuming that's what this is part of. That they're going to be a gaming league, and they're putting together teams, and they have sponsorships. And they're going to make a lot of money in this night. They don't do it yet. So if their revenue is out at least a couple of years, similar to Space or Virgin Galactic, where they're not going to be extremely profitable for like another 6, 7, 8 years, I would not be investing in those kind of companies. They're extremely speculative. Now, if they get beat up enough, then sure, you could take a chance. But I'm assuming when this company, I wish my thing worked here. I'm assuming when this company went public, that it probably went public pretty a lot cheaper than that. Can anybody tell me? Let's just see. Let's go with the 1-year chart. So the 5-day chart looks like poop. The 1-year chart, it looks like it was probably like a $5 stock. So your valuation for like, I'm just looking at the 1 year, obviously it exploded in February. Now let's remember, January and February, the markets, both the NASDAQ and the Dow, were at all-time highs. So it didn't really matter what stock you were at an all-time high and you looked really good and the valuation looked really good. But remember, we had that massive sell-off in March. So I'm seeing this stock was as high as $20. So you're probably saying, well, it's 50% off the high. It's $9.64. It must be good, Matt. This must be the bottom. And the answer is not really, because if tech continues to sell off, right, which stocks are going to be affected the less? The FANG stocks, right? Facebook, Google, Apple, when they have a day like today and they sell off, you're probably looking at 1%, 2%, 3%. When you have a stock like this and you have the sell off during the day, you're probably looking at 10, 12, 14, 16%. Let me just see. Yeah, it went down 15% today. So it's a more volatile stock. So I'm not saying it's a bad investment, but the way the market sentiment is, it's overvalued. So the real thing you're looking for is institutionals and traders and hedges and big money to be in your stocks, because that's what pushed them higher. The demand for your stocks push them higher. I don't see there's going to be huge demand for esports entertainment. I think if I was going to play something, I don't know if they're best in class, but I would like something with more volume. They have 6,000 shares after hours. I would rather be in something that has a couple 100,000 shares after hours or 40,000 shares after hours, something that's more actively trading. Again, if the market gets hit a couple more days, this stock will be $6.60. However, if we get a huge bounce tomorrow, you're going to get back there 15%. So it's more about market sentiment. I will look up. Sorry, my hands sweaty. It's outside. That's why my computer's not working. Okay, Genius, JNUS. All right, Genius Brands. Okay, $1.41. So they used to talk about Genius Brands, and they would talk about how it would spike right before Christmas, so right around Thanksgiving. I don't know if you've heard this, but if you're into the stock, that's what I've heard about the stock, that it's usually like $1.20, and then it spikes close to $3, and then it comes back down during the year. So again, Genius, 4 letters, NASDAQ stock, more speculative play, a cheaper stock. Yes, I understand they have product out there that's in demand, and some people really like their product and think they're a great company. But what you need for Genius to rebound or to be a good stock is you need the NASDAQ to be extremely strong. If the NASDAQ is wavering, say you have a good day in the NASDAQ, then a bad day in the NASDAQ, the stocks they're going to be investing in are going to be the best in class. So even if it's fintech, it could be Tiger, it could be Futu, it could be eBay, it could be like a NEO or a Tesla. It's not going to be diverse throughout everything. Like Workhorse, I believe, had a good day today, but I think XL and some of these other plays got canceled. Oh, one other comment. Somebody reached out to me and said, "Hey Matt, look at this SPAC," and I forget the symbol was it, the symbol, but it was down to $10. It was as high as like $16 or $19 earlier in the month, maybe a week or two ago. And I said, well, yeah, they haven't merged yet. And he said, yeah, the merger's coming up in a few weeks. It's going to take off. The good thing is it can't go below 10. That's what he told me. And I said, it can go below 10. SPACs can go anywhere. SPACs are supply and demand. So if people are selling it and they don't want it, or they need the cash for other positions, and they sell it, it'll go to $9.50. It'll go to $9. It'll go to lower than that. So is tech still overvalued? So that's the whole thing. I don't think tech is overvalued. I think there are specific tech plays that will be extremely successful. Now, I'm not saying you have to go to Apple, Netflix, Google, Facebook, any of those. I'm telling you, there are some specific tech plays. Now, I would look at best in class. So when I look at NFTs and growing businesses, I happen to like eBay. Now, why? If you look at the chart of eBay, you'll see that inflow has dwarfed outflow for, I believe, 4 straight days. I don't know if it happened today, but that would be 4 out of 5 or 5 out of 6. There is demand, and eBay before the market tanked this morning was back at $60.50 or something like that. And if the market had changed or corrected itself, eBay would have been. So I'm looking at for NFTs. So NFTs, who's got the best NFTs? TKAT, that was moving 10% up this morning. I think it went up from 10% to down a few percent. Light volume, all right. And again, 4-letter symbol. NASDAQ got beaten down. Everybody's selling. All right. Text over NEO. I was checking charts. I see the next support level at 29. So yeah, I checked the charts at NEO as well. No, there is more demand on NEO. So again, stocks that I have investment in, I look at the demand and I look at the buys during the day, and the numbers flick across my screen, and I actually can just chart them in my mind. So that's one of the reasons you guys follow me, because I see shit that nobody else sees. So I don't need an algorithm to tell me what's going on. But NEO has support. I would have pulled the plug on NEO if I didn't think it had support. I was really excited when I saw it in the $30 range pre-market the other day. What was that? Tuesday, I guess yesterday. So yeah, they tried to push it to 35. Then it held 34 and a half. Then it held 34 well, and then it was under 34, but then they bounced back to 34. I got to assume it's probably like $33.60 now. I think the markets are pretty beat up. So do I think the markets can get beat up by another 10%? Let's just talk about NEO. Do I think NEO can go down to $30 or even $29 like you say? If that happens, if NEO is at $29, understand this. Understand Plug, which was at like 23 or 22 or $24, would be at 18. Understand Skills that some of you like, which is probably at like $13 or $14, would probably be at $10. You have to understand Blink, which is probably at like $29, would be at $24. So for you to say NEO could possibly go down there, oh, the Tesla's at like what, $5.99 now? If NEO goes down that, Tesla would be around $5.30, let's say. So if you say to yourself, yes, I could see Tesla at $5.30. I could see Candy at $4, KNDI, which was $4.40 the other day. I thought it was pretty low. Then it bounced to like $4.70. I don't know. It could probably be around $4.40 right now. If you think these stocks can lose 10%, it's got to be across everything. They're not going to pick on NEO. It's not like NEO is going to lose $4, so going to lose 12%, and the other stocks aren't going to move. So you have to say to yourself, is Tesla going to lose 12%? Tesla at 600, if they lose 12%, that's $72. Will Tesla be at 528? So you look at the chart and you go, I don't think so. I know Kathy likes Tesla. I know other institutions like Tesla. I know they get tax credits. I know this. I know they release cars. I know they, Tesla, even though they reported less in China, the stock isn't down at $5 to $120. Plus, NEO has huge support from the Chinese government. That's another thing I like. Plus, they have their battery day, and they do a few other things. My computer just turned off. What did you see for eBay today? Lots of volume buys, but it's down. Yes. Okay, so real quick with eBay. Again, the demand was there. I looked a bunch of different times. If you look at today's chart, okay, eBay had that nice U forming. So if your charts ever have that perfect U, all right, the problem with your charts is if they violently go up or spike down or up, so they're up 3%, then down 3%. You don't want that. There's no stability. When there's stability, you'll see staircases. You'll see a nice curvature in your chart. So yes, I love the eBay chart. The fact that the market's beat up, I'm actually bought some eBay options. Those were the only stock options I bought. Well, NNOX, but that's just because I saw volume. But everything else I played today was around ETFs and around market volatility and where I saw the market going. Now, again, I called that wrong, and I'm not perfect, and I'm sorry for you, those of you who are maybe like, dude, it's spiking. I'm going to get on. Matt's going to be right, and we're going to make a shitload of money. Today was tough. Again, I thought the oil crisis, the gas crisis would avert. I thought there would be peace in the Middle East. Not peace, but there would be a truce, a 7-day truce, an 8-day truce. Take care of your injured. All right, so eBay, yeah, again, and eBay's offering NFTs on their site. They're going to start selling it. They're adopting crypto. They're doing a lot of great things. And again, we all remember eBay from when we used to buy and sell stuff on eBay. It's a lot different these days. It's a lot more technology than you would think. So I love eBay. I never thought I'd say that, actually. Let's go on to the next question, please. Is TRIT going to bounce back? Well, I can tell you that institutions that were showing TRIT support in the $6 range and in the $5-something range, it dropped pretty damn hard. And I saw at least 2 very large positions sell TRIT. Yeah, I thought it was down to the 502. I thought it actually went to the $4 range or something like that. Or maybe it was down to 502 and it bounced back a little. That probably makes more sense. Yeah, it's probably like 530 something. Yeah, let me look because it's on my computer. Why don't we do that? Sorry. I get sidetracked and I try and guess. So again, for those of you who missed this, guess with everything. When you guess a stock, guess what the price is. When you see the market moving or you see what your stock is, whatever your stock is, whatever you see first, if you see your stock first, say, okay, my stock's up 3%. The market should be up 180 points. And then if you look and the market's only up 20 points, you know you have a good stock. Or if you look at the market and it's up 400 points, you're like, wow, my stock should be up 6%. I'm not in a good stock. So always make guess. Same thing on the downside. If the market's off 700, Dow's off 700%, and your stock is only off 2% on the Dow or 2.5%, it's probably okay. Or 1%, it's probably okay. You're in problems, and there was profit taking like FCX. I thought I got into, not FCX, CLF. I thought I got into CLF so good, and I got in sub $20 at $19.95. I bought 2 positions. I announced it. It was at the beginning of yesterday's trading, and then it popped like 5%. Guess what? It gave it all back. In fact, at some time during the day, if anybody looks at my spreadsheet, CLF was under $19.95, which means you could have bought the same stock for cheaper. So again, anybody that's saying, but he didn't alert it, he didn't do this, look at my spreadsheet. It has all of my stock positions. It has how many buys I've made, either 1 through 4. Sometimes after 4, I'll double down to 8. It has my average. It has my price target on it. And yes, my price target, I generally think it's met within 10 to 11 months. Real quick, my first price target was met since I started giving these alerts March 1st. Party went to $10. I sold yesterday, right? And I said after, it could go to 11. I wouldn't be that upset. Actually, I would be upset, but I'm happy that I got $10. It hit my price target and I sold. And then what happened today? I think it went under $9 for a little bit. It's probably over $9 right now, but that's 10%. So who the heck wants to give back 10%? If I just made, and my average was $6 on that, so I made, I think I made 43% on that trade. So 43% on Party. If I had still held on to Party, instead of being up 43%, I would only be up 33%. Who the heck wants to give back 10%? Again, I didn't know the Dow was going to tank. So Trit, it lost its support. It still has institutional support, so it's not falling out of the sky. But yeah, it looks like crap. It's following tech. It's following the NASDAQ. You got Ebon at $3. You have Trit. Again, all these are Asian companies. Trit is a Singapore company. Ebon is a Chinese company. There's so many. SOS is a Chinese company. I believe FTFT is probably a Chinese company, or maybe it's a Canadian company. Anyway, there's so many offerings out there and these dilutions and things like that. All these companies are going to beat up. I was pretty sure this company was a double-digit company. Now, it's so silly, but I'm like, geez, I hope it would get back to $8 or even $7. I'd probably exit out because it's a pain in my ass. It's me stepping in shit that I haven't stepped out yet. Roadblocks, yes. So Roadblocks was so strong today. And what do you mean it was strong, Matt? It was down 2.5%. Look at the Roadblocks chart, just like eBay. Look at the Roadblocks chart. You'll see it's a curvature. Now, even when the market started tanking again at 2 o'clock, at 3 o'clock, Roadblocks was strong. I actually thought if the market did rebound at the end of the day, again, the NASDAQ finished down, I think someone told me 357. I actually thought it was going to finish down 200 and change. So I thought at the end of the day, there were going to be a number of stocks that would have popped and actually finished up green. And I thought Roadblocks was. So yeah, it was only down 2.71% after it climbed 20%. Yeah, so anytime something climbs 20%, 30%, 40% in one day, okay, there's usually a sell-off. Meaning, it doesn't matter that it's a good or bad market. Today should have compounded that. So yes, Roadblocks should have sold off 14% or something like that if the market was accurate, which is why I don't think the market was accurate. People are holding Roadblocks. It doesn't have a price target. So my price target on Roadblocks, I was going to say something like $78, but that would be just so silly. So my price target on that is over $90. So I think we got in at what, $65, $90 would be $25. So $25, that's what, probably like 40%, 39%. So yeah, I think I'm going to go $98 on that one. Good question. I just got Roadblocks. I hope it was a good move. Yes. So anytime there are stocks that are struggling. So let's look at Upstart real quick. All right. Upstart pre-market. I announced they beat earnings yesterday at like 4:30 p.m. and the stock was $98, and then it spiked all the way up to like 112 pre-market. I might have been even higher, but let's go with 112. And then it pulled back to, I don't know, in the 90s, let's say. If tech turns around, Upstart would be a great company to look at. Roadblocks is a great company to look at. You have to see where there's demand. Jumia and Plug, those are more spec plays. But yes, there is demand. Andrew left from Citron, who no longer does short reports, right? He's in Jumia. He announced he was in Jumia. He announced that he liked Jumia. I think they came out with earnings and they said some positive stuff. But the whole thing is they don't have the right valuation. They're not crushing it on earnings, which means when they come out with earnings, it doesn't really affect the stock. Now, if they came out with earnings like Facebook does, and Facebook's like, yeah, we made like $20 a share, and you all think we're going to earn $15 a share, those are the kind of surprises. In fact, I think Facebook used to surprise. It'd be like you're expecting $8.36 per share, and they come out with earnings of like $24, and you're like, oh my God, they crushed it. All right, next question. Tesla, $652 call options expire, 528. Your average is okay. Unfortunately, I can't look at options right now, but 652, and we're talking about this Tesla stock that said 600, right? And your average is $20. Now, when you say your average is $20, that means you're implying that you have more than one contract. So you definitely need Tesla to bounce. Now, the good news for you is when we saw Tesla bounce yesterday, you saw it move pretty quickly before it sold off. I think it was at 625 or something like that. You should have used that time yesterday to sell your Tesla options. Anytime you have an option position, this goes for everybody. So this is universal, right? If you have an options position and it's struggling, you're down 70%, you're down 60%, you have no more money to average down, you're down 40%, you have no more money to average down, whatever it is, plan ahead. Plan for that spike like we saw with Tesla yesterday. Plan to cut your losses as best as possible. So I don't know, Tesla has your expire 528. So you have a lot of time there. You have a lot of time left. So yes, I would plan ahead for Tesla to spike. So let's say you have this $20 average option. I would put in a sell price of $24 tomorrow, implying a 20% gain. And then you're saying to me, Matt, but the options price right now is $9. I don't care. I'm looking to plan ahead. I'm looking for the spike, and I'm looking to get you 20% profit. And if it doesn't sell tomorrow, guess what you're going to do on Friday? You're going to go into your computer and you're going to type, I want to sell my contract, the 652 contract, whatever, 528. I want $24 per contract or $240 per contract. Or I'm sorry, yeah, whatever, $20. So maybe it's $2,000. So yeah, I would look to make profit. Plan ahead. So if it doesn't sell on Friday, go to Monday. Doesn't sell on Monday, go to Tuesday. You have many more trading days till the 28th. Okay, next question, please. Pipeline restarting operations 5 p.m. today. Oh, dude, that's the best thing. Thank you, Jonathan. Why didn't we say that earlier? So what's going to happen? Let's hope that President Biden or the Mubarak of Egypt or somebody else, maybe Turkey, gets involved, and let's get some peace in the Middle East. What would happen? So let me just give you worst case scenario. Well, I think we've seen it. I think we saw it at like 640 today, UVXY 640, and then it dipped down. And right before close, I went to 603 from 625. And I said to them, those sons of bitches, they went from $6.40 like 20 minutes ago to $6.03, which is what the drop should have been. I can't believe it got up there in the first place. The point is, if things smooth out, guess what? That drop was nothing. You'll see it like off 6% in the morning pre-market, which means it'll drop 36 cents to start tomorrow. So it'll be at like 560 something. And then you'll see it spike a little to 570. Then assuming it's green market, then you see it go down to like 550, 548, something like that. And I'm hoping by Friday we get down to $5. Plain and simple. Things restore. Yeah, everybody calms down. That's what I'm hoping for. I'm also hoping that the inflation rate where we spiked to I think 169. So we were up 7 basis points, right? I mentioned this morning we were up 5. We went from being up 5 to up 7 basis points. That's an increase of 40% just today. So we were already spiking on the inflation, and then it spiked another 40% on top from today's gain. So 5 to 7. It's crazy. All right, please, let's get to the next question. Oh, I saw a question before about Ebon. Should I hold Ebon time, whatever? So let me just answer that real quick. So Ebon, yes, at $3, it's a strong base. Even if it's $2.90 now, I would actually be buying $2.90. Not like it's going to spike off the charts, but there are shorts at work. It is a real company. Coinbase will have earnings. When Coinbase has earnings, all these other types of companies will come into play. Ebon, one of them, because they have Ebonics, their trading platform. So yeah, the current eBay option you have for 521, will you be averaging down on that one? Yes. I try and average down as best as I can to follow the rules, but I am following my platform, so I'm sending out alerts. I'm updating my spreadsheet. I'm trading my account. I'm running errands for my wife. I'm picking up my kids. I'm trying to sleep because I don't sleep, so I wake up at 4 in the morning. I'm exhausted by 9 a.m., and I'm trying to figure out the market and make sure I'm giving you guys good, accurate, intelligent information. So real quick, I think 2 people actually left my platform today, and I get it. If they got hurt today, and this is not like a negative commercial on myself, I get it. But the whole point is longevity. It's like diversification, okay? Don't go in with 2 feet. Buy one contract here, one contract here, one contract here. Average down the right way. Like I said, if you don't have the money on the side to buy these positions, then you can't. Then you just wait. Or maybe you buy stock. I mentioned a stock. And even though I'm buying options, you buy 5 shares. And if it goes down 10%, you buy 5 more shares. You do what you can to figure out the information that I'm providing you and use it as best as possible. So again, longevity. People that stay with me, I appreciate it. Thoughts on BLDR? Again, 4-letter stock. Love, 4-letter stock. So I'm guaranteeing that they're both probably beat up. Let's see if my computer is obviously not working right now. Sorry, stick with me. We're almost there. Okay, it's reloading just slowly, which is great because I'm talking live. Okay, so let's go to another question first. When this loads up, I will get back to it. If I want to average down on my May calls, are June calls far enough out? It really depends on the stock. It's whether you think the stock will get beat up. Now, you look at the June calls, whatever the strike price is for May. Let's say it's a $25. Your May 21st, you're expiring. I would look at the June 18th. If you go out enough days in June, you're good. But there are some June 4th options, something like that I wouldn't suggest looking at. So I would go out. And if you don't think the June is enough, because June 18th, you look at the number of trading days, it might be like 30 days or 33 days, then you can go out further. If you go out further, yes, it will cost you a little more money, but it is the safer move. Because if your stock goes up, whatever stock you have, I'm not sure why my computer is not working. Let me just close this down. I'm not sure what stock you have, but if it goes up, in June, let's say, and you have options that expire in September, guess what? You're still going to be profitable. Instead of your option going up 50%, it might only go up 40%. It's still profit. So you might be missing out on a little, but again, it's better to be safe. Buy yourself the more time. And I'm going to look at those two stocks, market watch. Let's get here real quick. I wish I had my other phone. That would be great too. Okay, love. Here we go. So let's look up LOVE. Okay, no, it's freezing again. Probably because my fingers are sweaty because it's so hot out. No, it's just not working. You know what I'm going to do? Go with me because my phone is dying, but I'm going to grab my other phone real quick. And that's where I'm going to look it up. Let me just pull this out here. Appreciate you guys staying with me. I'm not sure why the computer isn't working, but let's open this up. Okay. So we got LOVE. Okay, work a double phone here. Staying outside. Okay. I'm going to look at the 1-month chart of love. First of all, the volume's pretty low. You have about 300,000 as a market cap of 1 billion. It actually has earnings per share. The book values looks good. It's a $72 stock. The chart looks great on love. So I really like love. I would hold on to it. In fact, that would be definitely one that I would be buying even at this level. It's up 33% over the last 3 months, but over the last month, it is basically flat. So if you guys are watching, you probably want to add love to your watch list because it actually looks like a decent chart, even with the market being beat up and with 4-letter symbols being beat up. Now you had a second one. Let me just add this to my watch list real quick because it looks good. I'd love to get to that other stock. Can we go back to the question, please? Am I still bullish on the market? If not, why am I buying puts on this company? Okay, here we go. BLDR, right. So BLDR. Builders. Okay, so we like building stocks. Oh, God, it looks terrible. I'm assuming they probably had earnings a couple of days ago. It looks like people sold into the earnings, meaning there was probably speculation on this company, Builders. I would not be buying right now. It definitely looks beat up. So I'm assuming that it's a building company. It's probably going to go. It's on the NASDAQ, but it's going to go right in line with the market, and it dropped. That's a 1-month chart. Let's look at the 5-day chart. Okay, you know what? I mean, it looks like every other NASDAQ stock. So, yeah, I mean, it might be a decent one. I'm actually going to add it to my watch list because I like your other stocks so much. All right, let's go on to the next question. I think it was about the market. Am I bullish on the market? If not, why aren't I buying puts on these companies? Great question. I am bullish on tech. All right. First off, Dow. I am not bullish on the Dow, and I mentioned that on Friday after the close that we had peaked a little too much, and I would anticipate a sell-off. And with that sell-off, I thought there would be a transition into tech stocks. And there was a transition to tech stocks. We saw the reversal a little on Thursday afternoon. We saw it continue into Friday. Then Monday, we got burnt, and the market pulled out from under our legs. And then my people in New York told me they were going to be buying on Tuesday. I was buying on Tuesday. It looked looked good to me. So, yeah, I think there is demand for tech. I think some tech companies there will be demand, but you have to be very specific. Again, you want to be the industry leaders. You want to have the best information. So if it's between ChargePoint, Plug, and Blink, I'm going Plug. If it's between Neo, Tesla, XL, Workhorse, and I mean, there are just so many of them. I would probably pick Neo and maybe Workhorse because they were beaten up. I probably wouldn't be in Tesla. Am I still bullish on the market? Yes, so I'm bullish on the market. I'm not so bullish on Dow stocks. However, the Dow's extremely beaten up. So if you're in Delta, and again, I saved someone from entering into Delta today. They were like $44 flat. Looks pretty good. I think it went down to $43 and change. The point is, same with Carnival. I mentioned yesterday, I did not get my 2 Carnival positions filled at $25 and $24.90. And I ended up paying $25.20 for 2 positions. And what happened today? Carnival went under $25. So again, I'd like to tell you guys to please be patient. Whatever you're doing, if you follow the rules and you pick an entry point, do not get FOMO, which is fear of missing out. If you pick an entry point, whether it's stock or options, stick to it. If you figure out in the morning where you want to buy the option and then you look at it and you're like, I'd like to pay $150 per contract for this options contract. And you look at the options contract and it's like $3 and you're like, $3? I only want to pay $150, not $300 per contract. Guess what? Put in the price that you're comfortable with. You put in the bid of $150 and a day like today, it probably would have gotten hit. So yes, that's how I would be playing it. If I knew the direction of the market each day, again, I was fooled today. I thought the market was going to rebound. I thought it was just overdone, over dramatized. I saw the buying yesterday. But again, with all the messed up things in the market, and it wouldn't have surprised me if Biden went on and started talking. All right, you sold EH stock for a 10% loss, and you bought a $10, $15, $12.50 call, and you're up 5%. Do you think that's a good plan? Yes, I think that's a wonderful plan. And I'm glad you brought up EH stock because I saw demand. When the market was getting hurt today, EH was actually positive. It wasn't positive more than like 1 or 2%, but EH was still positive. Then the market got hit more, and EH was only up by like 8 cents or 10 cents, but it was still green. So there is demand for that. So I'm glad you followed the rules, basically selling your EH stock, which was a 10% loss. If you have a 40% loss, you can still do that. Then you figure out where you want to make your money back. So you bought the calls, you're up 5% of the calls. Good plan to take profit at 15 or 20%. No. If your options are out for October 15th, I'm going to suggest you make at least 100%. And if it goes up to 100% within like 4 or 5 days, because I'm telling you, there is demand for EH, right? If it goes up and you're up 90% come next Tuesday, guess what? Set your sale order a little higher. Try and make 200%. In a month from now, if it gets around 200%, you're up 186%. Go up even higher. Obviously, if there's demand and there's volume for your stock and it's charting well, okay, you want to hold on as long as possible. The great thing about buying options in September, October, November, somebody mentioned, KR, you mentioned leap year options, that you wanted to buy leap year options because everything was tanking this morning. Great idea. But as they continue to go up, you don't have to get so nervous to sell. You're more nervous and you more have to plan ahead if your options expire this Friday, next Friday, something like that. All right, next question, please. Okay, yeah, should we cut the loss on Ebon, Time, and Trit? So here, I just summarized them before. Ebon, I think, has strong support at $3. So no, I'd be holding on to that. In fact, if you don't have an Ebon position, I would probably be buying. If I had the chance to buy Ebon right now and I didn't have any bags and I could buy it for $3, I would buy it because I think you're going to get a huge return. TYME. Sorry, I lose my voice. We're going to end this real quick. TYME. There was huge demand today. As you saw, the markets were getting beat up, and it was still holding $1.21 pretty well. I mentioned that yesterday. It was actually holding up pretty well. I mentioned that Monday. So TYME, I know a lot of bag holders are out there. I know where you guys got the stock from originally. I've got 2 positions. You wonder where I got the stock from originally. I thought I was calling the bottom on the stock. I obviously didn't. I'm in at $2. The stock's at like $1.20 now. I haven't averaged down yet because I've been so damn busy, but that is definitely a stock I would average down on, and you'll see it tomorrow. I bought and sold Roadblocks, see it so many times only because they cost more and you need the money. Yes. So again, if I hate doing it, but if you need the money and you're telling me you don't have money to average down, you need to most importantly average down on your options. If you missed how to average down, watch from the beginning. I speak about it. If you have options expiring this Friday or next Friday and you want to average down, first off, you don't do that. I understand you want to support the position, but if they're out of the money right now, meaning if today was Friday or today was next Friday, they'd be worth 0. You don't want to throw good money after bad. So there's a proper way to average down, and I explained that in the beginning of the video. So please watch the live stream again. Ethereum, why did it dip so hard today? if you didn't notice, it wasn't just Ethereum dipping. It was all cryptos dipping, and it was like around 12 or 1 o'clock, maybe even 2 o'clock. I kept checking back because I was waiting to see my position dip another 10% because it wouldn't have surprised me the market was selling off. But it didn't. It holds steady. So I gave back all of my profits that I made yesterday when I mentioned Sandbox, SAND, that I bought into. I was up 10, 11%. I was actually down 1% today, so I lost the 11. I was down 1%. I think I got a little bounce back. It's just all cryptos are selling. They're selling Bitcoin. They're selling Bitcoin stocks. They're selling other cryptos. I'm in Trias, TRIAS. I think I lost, 15% since yesterday on that. So, yeah, all cryptos are getting hurt right now. It's just people are reconsidering if that's where their money should be. Thank you for being here. I'll see you all tomorrow. Yeah, thank you all for being here. I can't believe my phone made it. The percent's like this. I'm sorry about my computer. I will get that fixed. And I think you all are great. See you all tomorrow. Thank you, guys.